Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, here we are, Phil. We're back. Episode 1, Season 10. Can you believe that?
I know. We need to get it right, don't we? It's a good job we're not saying it anymore, isn't it, really? I mean, we part of we don't have to do our own introductions anymore, but because I'm sure that we would have messed that one up, definitely. But yeah, no, Season 10, Episode 1, Another full year of it. And certainly hasn't slowed down between Christmas and New Year, as we'll get to the headlines this week.
No, I mean, even allowing for a short week this week, there's still plenty to talk about, isn't there?
There is, yeah. And I think one of the questions I'm getting asked a lot is, when is it the right time to stop saying Happy New Year? Is there a right time?
Yes. I mean, that's a topic that's on the mind of Stephen Whitten. He's joining us for his first Menable moment of the year. In the second part of this show. But I think we're almost there, aren't we?
It feels like it, doesn't it? It feels like, when people, you talk about last year now, and it's 2023, yes, which is only a week ago. But yeah, no, I think we're very well and truly into 2024 now. And I'm sure it'll probably go very quickly and as fast as last year went, didn't it? Won't it, I suspect?
Yeah, and I've been really pleased with myself because every time I've written the year so far this week, I've got the year right, but I've actually got the month wrong. I thought we were in 02 already, so so I need to rewind a bit.
Yeah, don't wish it away too quickly. We'll soon be there, Curtis, for definite. But we've got a great lineup of headlines today, and there's been a lot going on, particularly around the Chinese and EV sector, but we'll get onto those shortly, won't we?
Yeah, there's definitely an evolving theme in today's pod. But before we get on to the headlines, we all know that 2024 is going to be a challenging year for dealers with the introduction of the ZEV mandate, which obviously went live at the beginning of this month. And that's legislating for increased EV sales across the board. There's also the ongoing uncertainties around the rollout of agency. Pre-reg is coming back into play, which we'll probably pick up on next week when we talk about the December new car sales figures, and also fragile consumer confidence as the cost of living crisis continues to bite. So we're just using this as a shout out. So if you're listening and you're a supplier working closely with dealers and would like us to profile your business and how you can help dealers as part of our new series of Motor Trade Radio supplier specials, then just get in touch with Philip or myself by messaging us at LinkedIn or X/Twitter, or send us an email to motortraderadio@yahoo.com. And let's have a chat, and we'll come back to you with some timings and headlines this week are from the Financial Times, AM, Automotive News Europe, Motor Finance, and Car Dealer, starting in a moment with Tesla overtaken by China's BYD as world's biggest EV maker. Also, BYD picks Hungary for its first European car plant, while Chery considers the UK as a base for right-hand drive production. And staying with new car brands, Judge Service reveals that what will make buyers actually switch from established brands to a new mark. Used car supermarket, available car records losses in latest year ends, and the FCA clears Lithia's acquisition of Pendragon.
So as you say there, Curtis, first story, and I think the FT have certainly been busy over the Christmas period and straight into the new year. Lots going on, particularly as you said right about the EV market. But as you say there, the first story is that Tesla overtaken by China's BYD as world's biggest EV maker, saying that the fourth quarter sales from Elon Musk's group beat estimates but fell behind Chinese rival for the first time. Now, this has created quite a bit of discussion, debate across the social media channels, as you might expect. And Curtis and I were speaking just before we started to record today around what the ramifications may be of this on what Elon tends to do when there becomes a challenge or he falls short of his target expectations, which tends to be a little bit of discount, doesn't it, Curtis?
Just a little, yeah, yeah. He doesn't like direct competition, does he? Anyone getting sort of too close to him, and as we saw last year, the response was very much dropping prices, which has a knock-on effect pretty much across the board now, doesn't it?
It does. But again, it shows the speed and the power of BYD now in that,
Yeah.
particularly in the EV sector and the growth. And their strategic plans for growth and how quickly they are moving. But to begin with, as I said there in the opening headline, that Elon did beat their Q4 expectations for the target, but still fell short of BYD's growth plans. But it does sort of show the speed, I say, within which BYD are growing and they're growing in that global sector now.
Yeah, you're right, and I think that's probably going to be very much a hollow victory for Elon Musk because although the figures are impressive, because Tesla sold over 484,000 cars, and that's in the final quarter of the year, and that's more than the anticipated 473,000 models, and that's what the analyst prediction was. So while he'll be pleased with that, he won't be pleased that BYD actually overtook Tesla and sold 526,000 vehicles during that same period, at the same time. And it's worth just emphasizing that that is pure battery electric vehicles, because of course BYD also produce hybrids, but that's their pure BEV figure. So they are the biggest selling battery electric vehicle manufacturer at the moment.
Yeah, and say the Tesla's annual sales of 1.8 million last year was obviously a major achievement in what they describe as a choppy macro environment for the electric vehicle sector. So they were fairly pleased in terms of their performance there. But to your point there, that BYD, which it states in the Financial Times, was founded back in the 1990s after focusing on manufacturing of rechargeable batteries, which we've mentioned before on the podcast through mobile phones, and then obviously expanded into the car industry in the early 2000s. So this is not a new business by any stretch, but very much now heavily focused on not only that alternative fuel market, as Curtis has mentioned there, but very much on that battery electric vehicle market outside of China, which does kind of lead us on to the next story, doesn't it?
It does, yeah, because the headline we chose was from Automotive News Europe, and it is staying with BYD. That they are the brand of the moment. The headline there is BYD picks Hungary for its first European car plant. Now, this is hugely significant because this will make it the first Chinese car plant in Europe. if it goes ahead. And from the story, it looks as though plans are well advanced here. The Hungarian government is providing all sorts of incentives for BYD to develop a plant. There's no timeline, but I think we can safely assume that once everything gets signed off, it's going to happen pretty quickly. And it's also worth pointing out that BYD also has a connection with Hungary, because it does produce electric buses at a plant in northwest Hungary. So whether or not the location will be close to that, I don't think we know that at the moment, but this is a really significant move, isn't it?
It is, yeah. I mean, we posted the story on the LinkedIn the other day, and it got a lot of debate because not just that it's about BYD, but the fact that a Chinese manufacturer has now made that move into Europe to buy a plant, and we know that they're not the only one that had intentions to do that or have intentions to do that. But this is, bearing in mind that it wasn't so long ago that a European market were very much trying to block Chinese products going into Europe, or apply tariffs for product entering the European market from China. And then subsequently, there were partnerships that bared out between VW and people like Stellantis with Chinese manufacturers in terms of partnerships to get into China themselves. But this is a significant game changer now. One, because of the things around rules of origin and the supply of material to build battery electric vehicles, but predominantly to supply products into that marketplace. And this, I think, is a significant change to the market and the growth of these Chinese manufacturers outside of China themselves, into both Europe and the UK. And we know that the next move will be, other markets across Europe. And it does say in the story that the conversations were with France as well as over in Hungary there. So I think this will be first of many, not just from BYD, but other manufacturers that will be looking at plants across Europe and the UK. And then we know that they'll try and get into Mexico to supply the US market with product as well.
Yeah, definitely. And within the story, some of the analysts are talking about what this will mean in terms of volumes. So we're looking at something in the region of 200,000 units annually once the plant is up and running. That's what makes it that cost effective in terms of that production within Europe. And the big numbers there, and also, as you say, it gets around the whole import tariff issue. If the EU does impose tariffs on Chinese produced vehicles, this is the way around it. And we did see this obviously back in the 80s and 90s when some of the Japanese plants were set up in continental Europe and indeed the UK as a way to get around tariffs and produce locally. And this is all part of the Chinese brands in particular expanding outside of their domestic markets and becoming less dependent on their local markets.
No, you're right. And we know there are reports that, the Chinese market, in terms of its growth, is slowing, and that opportunity is sort of seizing there. But BYD are quoted to say that it aims for a 10% share of up to 10% of EVs market in Germany alone in the medium term, and a 5% share of total registrations across the European market. So, that is some serious numbers coming from a single manufacturer entering that European market. So, say there that I think we're going to see a lot more. And we're talking here where Chinese brands such as BYD, SAIC Motors, MG brand, and NIO have all been expanding in Europe to become less dependent on their home market, where, as I just said there before, the oversupply and the price war against Tesla is obviously playing out and continues to do so.
And you know what, Phil? If only someone had done a podcast on BYD and what their plans are for the UK. So, if you do want to know more about BYD, because we did an interview with Simon Bisp at the tail end of last summer. He's the head of sales for BYD UK. So do check out that podcast. We'll put a link in the newsletter that goes out Monday morning. But if you are searching for it in your podcast feed, it's episode 50 from last year.
So continuing with the Financial Times and on the same of the Chinese manufacturer investment in UK and Europe, it's been announced that Chinese car maker Chery eyes UK factory for this decade, saying that state-owned companies set to enter British market with a range of petrol, hybrid and electric vehicles within the decade.
Yeah, this really is fascinating, isn't it? And it's a well-sourced story. It's worth adding that because the FT have actually spoken to the head of Chery UK, Victor Zhang, and he makes it quite clear that the ambition for the business is to rival South Korean brands like Hyundai and Kia, and they've obviously looked closely at how both of those brands were introduced into the UK back in the 80s and 90s. Now, Chery, it's another big manufacturer from China. They've got two brands that they're going to be introducing into the UK and Europe. A Moda, which launches as soon as this spring. That will be very much a premium brand. And also, the premium brand will be Jayco, which follows in the summer. So that's a quick rollout of two brands, and now they're looking at manufacturing in the UK. And what they're particularly focused on is, it's quite an ambitious target, this, because they're looking at not one but two plants, one for the UK for right-hand drive production, one in continental Europe for left-hand drive. So again, this will see a lot of vehicles being produced throughout Europe. I mean, they're talking about a bare minimum of 100,000 vehicles needed to be built in the UK to match what Chery sees as its key target of a 5% market share to rival the likes of Kia.
Yeah, and you say, it's great for the UK automotive sector because obviously, in terms of that production, supply and particularly export, we know that the Chery is the Chinese rival to Geely. Who already have a significant investment in the UK automotive sector, because obviously they've got control of Lotus as well as LEVC and other, which is the black cab business, as well as things like the Polestar, Volvo, etc. But we are looking at a significant growth here, and it is quoted within the story itself within the Financial Times that in the interview that it was suggested that the UK factory could also export cars to the markets such as South Africa, Australia and New Zealand. So obviously looking at a big investment into UK manufacturing, but also that opportunity of export growth out of the UK into other international markets, particularly for those right-hand drive vehicle marketplaces.
Yeah, and it does actually add in the story that Chery plans to use established dealer networks to sell its mass market Moda and the Jayco premium brands, and has deals in place with Arnold Clark, Listers and Endeavour, and plans to offer a 7-year vehicle warranty and 8-year battery warranty on its models to try and win over buyers to these new brands. So there's some ambitious targets here, aren't there?
Definitely, and they're not slowing down, are they? I think we're going to see a lot more of this play out this year.
Yeah, definitely. We'll have more on new car brands heading to the UK in the second half, but before that, we'll take a break, followed by the first Men-Able moment of the year, with Stephen Witten talking about 5 new steps to promoting mental wealth in the workplace.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are, and on your podcast feed. Next up is our latest Men-Able moment, looking at mental wealth and well-being awareness and best practice in the automotive sector. With me, Stephen Witten.
Yeah, hi guys, it's Men-Able Moments time again. Happy New Year to you. When do we stop saying that? I was chatting to a shop assistant in Morrison's the other day, and I said, when is it that we stop saying Happy New Year? And he said, I don't know, but I'm taking all the Christmas stuff down and putting out Easter eggs. So I thought, oh my God, it's relentless, isn't it? It's relentless. Anyway, that sound that you can hear in the background is the trundling of suitcase wheels. Although, to be fair, I've got one wheel that's a bit wonky, so despite whatever direction I point the suitcase in, it's going to go whichever way it wants. Sounds a bit like me, really. But if you saw my post last week, you can probably hear it in my voice that I'm giving in. The winter has beaten me. I've had this cold and flu-y thing now for about 3 weeks, can't shift it. I suppose the only consolation is that lots of people that I speak to are suffering as well. So there's clearly something horrible doing the rounds. So I thought a bit of a week in the sun and see if that sort of knocks it on the head. But there you go. So Men-Able moments time. I'm going to share with you over the coming weeks and months my 5 critical success factors for creating and instilling mental wealth across your business. And that's also been prompted a couple of times over the holidays by a few people who've reached out to me and sort of said that, what do I do? I'm getting a bit anxious. One guy in particular had only been in the business a little while, and already he's being put under pressure. He's not had any training as such, and was told when he comes back in January, the targets will kick in and all that sort of stuff. So I get it. I've been there. I've dished out that sort of stuff, and I've been on the receiving end as well. But it doesn't bode well for mental wealth, does it? Especially if we are recruiting people who we want to make a difference in our business, but we're still treating them in the way that we did 20 years ago. So, that's really kind of prompted me to think, let's really get intentional now about mental wealth, what that means. And as I say, over the next few weeks, I'll be sharing more and more of that on these Men-Able moments. The first one, of course, out of those 5 critical success factors is management commitment. Now, I don't think there's any question about that with many of you. You want good people around you and you want them to do well. And obviously, your business depends on it. So, but it's how that manifests itself day to day. So stay tuned and we will share a bit more. And as always, if you want any more info on that, you can give me a call, or we can catch up on LinkedIn or on stephen.witten@menable.org. In the meantime, I'm going to go off and get some sun, and hopefully that'll do the trick. Speak to you soon. Take care.
Now, I'm not sure, Curtis, that's what people wanted to hear on that one. So it's the 6th of the first month of the new year, and he's off to get some sun on holiday when we're all wondering when the snow is going to arrive. That's been forecast for the UK, and he's mentioned the word Easter.
Yeah, I know.
We haven't even taken our trees down yet.
Yeah. I don't know about you, but I've definitely got sun envy there. I mean, just the thought of sitting on a beach somewhere, which he will be as this goes out on Saturday morning. Steve will be sat by the pool or on a beach.
Yeah, but I mean, it's great that Steve is back on for 2024 and our season 10. We will get him on live at some point throughout the year as well for a chat between the three of us. But as you said there's a lot for him to talk about this year. So hopefully you're still enjoying the little snippets that we share from Steve and Mid-Able Moments. And as he always says, if you do need to get in touch with him, then please do. You can easily find him through the social channels, particularly on LinkedIn, or you can go to his website, which is menable.org, or you can email him at stephen.witton, that's WHITTON, at menable, MENABLE.org. And he's there to help and talk about what he can support with, etc. So please do get in touch with him if you need to.
Yeah, and tell him that we sent you.
Yes, you might get something for it. You never know.
You never know.
So heading on with the headlines then, and
Yes.
we're looking now into motor finance online. And this, I say, Curtis alluded to this one right at the start here. This is another survey researched by Judge Services as part of their car buying buyer barometer. And buyers will switch to new entrant car brands if the price is right. And this was that they polled the views of 1,000 consumers and found that 3/4 would be tempted by cheaper prices.
Yes, I mean, it really is fascinating, this, and it does tie in very neatly with the stories that we covered in the first half, which were very much about those new entrant brands. So, as you say, it's consumer research based on the views of 1,000 consumers, and what Judge Service set out to do was to find what would encourage them to actually make the transition, because it's a big decision, isn't it, going from an established mainstream brand or premium brand to a new entrant that you know little or nothing about. And those new entrants, what they did was they drew up a list of 15 new brands from China, South Korea and the US, and just asked what the level of awareness was amongst them. So we'll get to that in a moment. But they also found out what would encourage buyers to make that leap of faith. So nearly half, 48%, of mainstream brand owners said they would consider buying from a new entrant if prices were up to £3,000 cheaper, while a further 27% said they would switch if they were more than £3,000 lower. Now, owners of prestige cars were also willing to change, and I guess this is quite surprising, with over a third, 34%, saying they would switch if prices were at least £3,000 cheaper, while a further 41% would consider savings of over £3,000. So this is telling us a lot about brand loyalty, isn't it, Phil?
It's starting to change, isn't it? That's the thing with this. And just on the two stories we covered before the break there, whether it's Chery, whether it's BYD, or whether it's the Geely proposition within the UK and across Europe, clearly they are looking at this as the gateway into the consumer market and away from legacy brands into new brands through price and entry point.
Yeah, definitely. Now, I actually saw the data that Judge Service produced on this, and it is very revealing, because they were able to identify that willingness to consider a new entrant brand was strongest among new car buyers aged between 25 and 34, that was 29%, and used car buyers aged 18 to 24, that was 17%. But of these new brands, so as I said at the beginning, there were 15 brands that were identified. The highest rated for awareness was Genesis at 25%. Genesis, of course, being the premium brand from Hyundai, and that was followed by BYD, obviously a brand we've spoken a lot about already on this show, at 13%. So 13%, that's not that high. No. And awareness of other brands was even lower, even for those that are currently on sale in the UK, including GWM Aura, which had recognition of 6%, and Fisker, the US brand, that had recognition of 9%.
Yeah, and I think the key with this is, I mean, as we spoke about, and as you referred to earlier, Curtis, to that interview with Simon Bist from BYD. This is about getting the vehicle out there, getting it on the roads, getting it seen, getting it into partnerships with UK dealer groups to become either a primary brand or a secondary brand across other, and it's about getting these vehicles on the road, in the driveways, in the car parks, etc., and getting that brand recognised. And one thing that we have started to see, and we haven't covered on this week's podcast, is this partnership with UK finance companies now that we've seen start to play out. We know that MG uses Santander as their primary finance partner. It's been announced with Fisker have now gone with Santander, and so of BYD. And that's where you've now got this consumer recognised finance company now representing that brand as well in the UK market. So they are working very hard with it, and it'll be interesting to see what changes in 6 or 12 months' time with this research study to see whether which brands have changed in terms of that consumer recognition.
Yeah, and you mentioned Santander, and shout out there to Andy Green from Santander, who's a regular listener to the pod, because I know him and the team there have worked really, really hard on securing these partnerships with the emergent brands that you mentioned there.
No. So I think it's happening very quickly. And just on the stories we covered earlier about the investment into plants in UK, Europe, these brands they're coming very fast. It's a matter of time that they become recognised for brand. And to your point, in some of those stats there, Curtis, 48%, willing to look and consider a new entrant for prices up to £3,000 cheaper. Won't take much, will it, for that to happen? No. And for those above there, because we know that particularly the BYD proposition is about price. We know it's worked well for MG. They are that entry point, particularly in the EV sector, and it's worked for MG in terms of their growth and partnerships across the UK and market share across the UK and other marketplaces. So yeah, it's going to be a little bit of time on this, but it'd be interesting to see what this looks like in another 6 or 12 months' time.
Heading over to Car Dealer for the next headline, and it is available car suffers pre-tax loss of £7.3 million after £2.1 million profit year before. So this is Car Supermarket available car, and it's reported here by Car Dealer that the pre-tax loss of more than £7 million in 2022 was revealed in its newly published accounts for the year, and that year goes up to December 31st, 2022. And it does actually show, despite that, turnover rose from £329.7 million to £335.7 million year on year. But it does identify that borrowing costs doubled during that period from £964,000 to £1.67 million, and it posted a pre-tax loss of £7.3 million versus a profit in 2021 of £2.1 million. And it also went from an operating profit of £3.1 million to a loss of £680,000.
Yeah, and as you say there, I mean, we've talked about available car because obviously recently they did sell 2 of their sites, both in Cannock and in Leeds, to Big Motoring World. Pete Waddell there at Big Motoring World, and that was reported back in October of last year. But that does remain that they've got the Castle Donington and the Sutton in Ashfield sites remaining. But I think again they are putting a lot of this down to continuous problems with the used vehicle supply. They are a supermarket, and we know that the supply constraints have hit that sector significantly over the previous years. As that starts to sort of play out, particularly in that sort of up to 3-year-old, up to 4-year-old marketplace. And at the same time, we've got now heavy depreciation that we experienced in Q3, Q4, particularly in Q4 of last year, which when you've got, the stock levels that some of these operators have got, will hit them fairly hard. So they are saying that the continual problem with used vehicle supply, increasing prices, and obviously the tough economic conditions all play part in that poor performance. Obviously as part of that, and obviously led to its selling of the two sites last year as well.
Yeah, and they're not alone. It's worth pointing out that we've actually covered a number of financial year ends, and used cars are, this is a trend, isn't it? This is a trend we're seeing where profits are down, turnover might be up, but profits are down due to the dynamics that are happening in the used car market.
Yeah,
and
and I
certainly over
think
the last year or so.
And I think for context, we need to remember how strong 21 and 2022 in the main was for
Yeah.
retailers. The very little discount, very high margins. So I think on the interview there with the Swansway brothers last year, that they're reporting a downturn in pre-tax profit for this next financial period on last financial period, but still significantly higher than the pre-pandemic financial period. So there is context required that we've been through a significant period of high profitability for retailers, both in turnover and margin retention, that is now starting to slow down a bit as the market returns to what people might put as a normalized marketplace.
And finally, this week we head over to AM Online, which this, you know what, Phil, this might be the conclusion of a long-running story that we've been talking about for certainly most of last year. So the headline is, this will give it away: the FCA rules on Pendragon sell-off to Lithia, and the FCA, Financial Conduct Authority, has given the go-ahead. So this is for Lithia Motor, the US-based group, who put in an offer that was accepted for the motor retail part of Pendragon, and that also includes Pendragon Finance and Insurance Services Limited. But I guess what's going to be particularly interesting now is that what was the old Pendragon business will now transform into Pinewood Technologies. So really built around that Pinewood DMS business that was always the jewel in the crown of the Pendragon business for many, many years, and operated pretty much separately to the retail side and was used by other dealers. But this will now become a self-contained standalone business, albeit closely linked with Lithia.
Yeah, and it doesn't say in this story. It was originally muted that Bill Berman, who's the current CEO of Pendragon, will remain as in charge of the Pinewood technology, but also that they'll be joined by other operators from within the Lithia business as part of that board. So again, still quite a bit to play out on this one, and it was covered in Auto Retail at the weekend that a business called Gumshoe has also taken a share in Pendragon, and this is a New York-based capital management business. And they very recently of last week, took a 3% share in Pendragon PLC, and that's come out of nowhere. They've never previously had any investment in the business. So again, it's whether they are now investing to be part of the Pinewood, which will remain on the stock market, as the Pendragon retail business will be delisted off the stock market and become part of that Lithia business going forward. So again, I think we're going to be talking a little bit more on this one as it starts to play out as to what the end result is.
And I've got an open question for you, Phil. What's going to happen to the Pendragon name? Because that's quite an interesting question, isn't it? Because Pendragon, obviously, the name of the dealer group as was, but the customer-facing names are Evans Halshaw and Stratstone. So will Lithia continue the Pendragon branding?
Yeah, or will they transition Stratstones across? what will happen? I don't know.
Yeah.
What will it look like? Who knows?
So having said we'd concluded this particular story, I suspect we'll be revisiting it.
Yeah, we're gonna see what starts to play out, because the shares are still active at the minute. They need to be delisted and transferred to the new business, which is going to be the Pinewood, and we know that those shares are going to be split. It's not announced in this story, who is running Pinewood. It was previously that it was going to be Bill Berman. We can only assume that it still is Bill Berman at this stage. And then, as you say there, is how this, the name and the branding will start to play out. And then we'll get into the world of conversations around brands, around manufacturers, as they start to sort of reorganize a larger business in terms of brand representation. And we're seeing what does start to happen with that when you see these kind of takeovers in terms of brand partners and other things. So, and we've not mentioned Lookers this week either. There's a lot going on in the Lookers space, but we'll have that one for next week.
Yeah, definitely. I suspect there'll be a couple more updates for next week. But that's all for now. That's all for this week. Many thanks for joining us on the Motor Trade Radio podcast. Until next weekend, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.